Micron Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us. Let's take a look at what happened on global markets overnight. Stocks rose as Treasury yields fell, with investors buoyed by easing interest rates. Canada's central bank cutting rates by 25 basis points for the first time in 4 years, ahead of the European Central Bank, which is also expected to cut tonight. Investors on Wall Street were also encouraged by data showing an easing in the labour market that could prompt the Fed to begin cutting rates this year. The S&P 500 and NASDAQ hitting record closing highs, led by gains in tech stocks. Nvidia's market valuation hitting $3 trillion for the first time as the chipmaker overtook Apple to become the world's second most valuable company. Nvidia is preparing to split its stock 10 for 1, which will take effect on Friday, in a move that could increase its appeal to investors. Hewlett-Packard shares surging after forecasting third quarter revenue above analysts' expectations, helped by upbeat demand for its AI servers. Intel gained after buyout firm Apollo Global agreed to purchase a 49% equity interest of $11 billion in a joint venture related to the chipmaker's Ireland manufacturing unit. The shares in CrowdStrike jumped after forecasting second quarter revenue above estimates. Dollar Tree fell after a lower than expected quarterly profit forecast, with the budget retailer saying it would explore options that include a potential sale or spin-off of its business. Canada has become the first G7 country to cut interest rates, with the central bank trimming its key policy rate to 4.75% from 5%. This came after inflation slowed to a 3-year low of 2.7% in April. Bank of Canada Governor Tiff Macklem saying if inflation continues to ease and our confidence that inflation is headed sustainably to the 2% target continues to increase, it's reasonable to expect further cuts to our policy interest rate. Well, the European Central Bank is expected to follow suit tonight. Now in the US, the services sector snapped back into growth mode in May, with the ISM non-manufacturing purchasing managers index rising to 53.8 last month, its highest level since last August. And private payrolls increased by less than expected 152,000 jobs last month, while data for the prior month was revised lower. That jobs data saw the US 10-year Treasury yield fall to a 2-month low at 4.28%, the 2-year falling to 4.73%, and the US dollar moved higher after services sector data, with the Canadian dollar falling after that cut to interest rates, the Aussie trading at 66.5 US cents. All right, well, to discuss that macro data and how it's likely to influence investors, Ira Epstein joining us from Linn Associates. Ira, good to catch up with you again. So, in fact, I just took a look at your note where you're saying we're about to get an education, given that Canada has cut, Eurozone looks like it's going to cut. Where does that leave the States then?
You got it. Now the question is, do you want to own the dollar or do you want to own the currencies that are getting the cuts? And that's the discussion going on. Literally, as we're talking, we might get an answer by the jobs report data on Friday. So I've got everything looking there. I mean, if you look at the charts, you do see the euro's been in an uptrend. The dollar's been coming down recently. Neither are in breakout modes yet. That doesn't mean it can't happen. The original school of thought, to go back to January, was that the dollar's higher for longer, the other currencies will cut, which is just what's happening, and that would drive the dollar to even higher rates because the U.S. economy is showing its resilience, its strength, and it's holding rates higher. Now that reality's hit it, is that the reality of what the market's going to do? And that is exactly where we're at on this. So you've got to look at all this taking place over the next 48 hours. I loved your comments on Nvidia, by the way. Do remember, people like to buy before a stock split. And on that split, they get stocks that are cheaper. And the idea isn't that the company's making more money because of that. It's that more people can buy it at, let's say, $120 a share than at $1,200. So the people that get in now get that and they go, oh, there's going to be a rush and people will buy it just because it's 120. And I've been around this 50 years. There's a certain element of truth to that.
All right, nonetheless, though, obviously it helped in pushing both the NASDAQ and the S&P to yet another record high. Ira, how are you feeling about where the market is at right now?
I think it's a one-trick pony, and I'm bothered by it. It's all Nvidia. It's what Nvidia can take up with it at this point in time. And then the reality is everybody's throwing a massive amount of money at this. Can the companies that do that, other than the chip makers, actually make money with their products? So we watch CrowdStrike, we watch others that are all doing this, and everybody's looking, does it really make you money? I've been through changes in technology over the years. Typically, the first wave is a powerful wave, and then you have to go and say, is that all she wrote? So we have to go through that. So am I nervous? Yes. Does that keep me from getting rid of the core shares that I've got my clients in that follow my advisory service? No. I mean, I told them to go down to a 30% ownership over the past 6 months on the way up. And now I said, you just own it. Forget you have it, because we don't know where it's going. Nobody knows where this thing is going.
And of course, so much of this being data dependent at the moment of what we're seeing more broadly, Ira, as we've already discussed with obviously with central banks, but also given that non-farm payroll data we're going to get on Friday. As I mentioned there, also the ISM services ticking up into positive territory. Again, private payrolls coming off, I should say. How are you reading the US economy, where it is tracking at the moment?
You also have Challenger Gray in the morning, which are the corporate layoffs or additions, whichever way it goes. So the ISM services, I thought it would be stronger because think of the time of year we're in. We're in exactly that time of year where outdoor services make up part of that. It's leisure and everything else thrown in. And the restaurant business, anywhere that it's warm, the outdoor cafes are open. So that means you're doing a heck of a lot more business. A lot of people make their money now in events like that. That doesn't surprise me. Where I'm concerned, I want to see what shows up, obviously, in the jobs report. The market wants to see a reduction. The market wants to see that the numbers that come with it, the labor numbers, the cost of hiring has gone down with it. We've seen that people aren't jumping from job to job if you were looking at the JOLTS number. And we lost 3 million offerings of jobs, which is a hefty number. So we're a mature market in terms of how many more jobs can we keep going. We can keep the market in good pause because 8 million jobs is still plenty that are being offered out there. But it's not 9 million, it's not 8.5, it's 8 million. And there's a big difference there. And a lot of people that are hiring have hired, and now we wait and see, can the industry in America come back? And if you're watching the industrial ETFs, or if you watch most of the numbers that come out of the regional Fed, at best, they're questionable if industry is picking itself up. We know the services are, but is industry, manufacturing, what's going on with that? And at best, it's been wobbly in part because of restrictive interest rates. And if they come down, the idea is then costs can come down and people can do more things.
Ira, commodities certainly proving to be volatile. We've seen oil come off quite significantly. A lot of that around that confusion or maybe doubts just as to OPEC Plus's strategy at this point. Also, copper, I noticed you've got a keen eye on at the moment. What are you actually watching?
Well, the good thing is I did not tell people to buy in the futures markets, the copper. This chart setups weren't there. But let's start with that. I didn't see this break coming. I thought that the market could pull back into the 480s maybe and hold there. I didn't expect it to get to the 450 level. And the chart pattern has changed dramatically. You know, they call it Dr. Copper for a reason. So what is it seeing and why is it down? I expected the break, and I wrote it in a special copper report because deliveries were going to come to get the big groups that were hedged and were caught because of sanctions on Russian metals and so on. That was being shipped in from different parts of the world. That's come, and those people got out of their problems. But to see it down like this and not getting a bid, that's not what I expect. So I have to go back to the drawing board. Oil, OPEC plus blue. All they had to do is say conditions warranting the 2 million voluntary cuts, they will start to peel back and allow 750,000 barrels a day in October, conditions warranting. They didn't say that. They said basically they're going to put out 750,000 barrels more. The market didn't like it. When I saw it come out, I wrote that night to my subscribers. I said, this is a bearish report. And that's exactly how it turned out. They missed a couple of words, and that's all they had to do.
And a quick check on gold, Ira. If we're seeing the US dollar strength continue then, depending on how that pans out just as far as some of the economic data is concerned, what is your view on gold going forward then?
Well, the 2470 level is obviously an important top at this point in time. So here you are with a market that sold off about $120 from there into the 2350s, and it's given you a little bounce. How much inflation is staying in the economy? Because you want to own gold in times of inflation. Well, if inflation's being wrung out, you're taking some of the gold argument out of the market. Number two, if the US dollar weakens, you put back in a bid, but why is the dollar weakening becomes the next question. And so you're at a funny spot. Again, this started not with copper. Platinum was the first market to actually give you a near-term peak. Copper was the next to do it, and then the gold market. And now silver is typically weak in the month of June. If you go to your seasonal studies, you'll see it normally is not as strong as the gold market is. So do I think gold belongs in a portfolio? Absolutely. Would I be a buyer right here if you were to ask? No. I think that this is a watch and see market temporarily. Next week when I'm on, we'll probably have something we can say because we'll have a lot of this data under our belt and we'll see the reaction to it.
All right. Thanks so much for joining us from Linn Associates.
Take care.
Quick check of where we're likely to get going on SPY futures there we can see up more than 0.5%. So are looking for a positive start on the local market, which does get underway in just a couple of minutes. Stay with us for that.